Good morning, everybody. It's Wednesday, October 23rd, 5:29 a.m. Central Time. Grain markets are a little bit lower this morning. December corn futures down a half cent at 4.16. November soybeans down 4.25 at 9.87.5. December Chicago wheat down 5.75 at 5.70.25. December Kansas City wheat down 6.25 at 5.80.25. December spring wheat down 4.5 at 6.12. Let's start off with this soybean/election story.
So, U.S. soybean exporters are rushing to ship products ahead of a potential Trump presidency. Traders are reportedly concerned that if Donald Trump is elected, China could again enforce tariffs on U.S. soybean imports. Tariff threats from Trump are causing some Chinese importers to ditch U.S. beans from January onward and instead pivot to Brazilian beans. The shift is causing the already small U.S. soybean export window to shrink. Premiums for immediate soybean exports are anticipated to decline in the coming weeks as short-term demand is met. U.S. soybean export premiums have climbed to their highest level in 14 months as a result of low water levels on the Mississippi River, improved demand prospects, and perhaps some commercial entities being caught off sides.
The article would indicate that we're shipping a lot of soybeans because Trump may be elected president in 2 weeks. I'm not sure how much of that is reality. Let's look at this Gulf basis situation. So at the Gulf, soybeans are trading $1.26 over the Chicago Board of Trade over the November contract. So beans at the Gulf cash price is like over $11, which is not totally abnormal. Basis, of course, is a function of a lot of things, namely cost of transportation. River levels are very low. So the cost to ship soybeans from your Chicago Board of Trade delivery locations on the Illinois River to the Gulf have gone up drastically. And that's part of the reason that this basis is really strong. It's part of the reason that the difference between the price at the Gulf is exaggerated versus Chicago Board of Trade because of the river. There are other things also: local supply and demand conditions, grain quality, cost of storage and handling. There's a lot of factors here. This has caught some people kind of by surprise, and I'd be one of them. I wasn't expecting this strength. Are we shipping a lot of beans because Trump's going to be president or maybe president? I don't know. I don't think so. So we did 2.4 and change in shipments last week, which in a year with a super early harvest and a monster crop is pretty darn normal. You could even make the argument that we should be doing better, that we should be shipping 2.7, 2.8. So I'm not going to say that that's a function of the election. I know the trade is aware that there's an election coming up. They're certainly aware of it, but this fits with all the normal seasonal patterns. When you look at export sales, this time frame right here, like we're smack dab in the middle of what I would call prime time sales window for your current marketing. There is some seasonality here. If you look at this chart, and I get it looks like spaghetti and there is some noise, but the trend generally over the last, call it 10 years and further past that too, is that you sell on the export market a lot of soybeans September, October, November, December, and then January you drop off because that's when the Brazilian crop becomes known. It's when Brazilian harvest kind of starts up. So again, I don't know. I mean, China always buys beans from the U.S. this time of year, and then they ship to Brazil in January. It just so happens that the inauguration time frame kind of fits with the seasonal time frame of when Brazil comes online and when the inauguration is going to happen. It all kind of lines up. Why are the soybean spreads strong? This is curious to me, especially because first notice day for November soybean futures is next Thursday. It's Halloween. And prior to that date, farmers holding basis contracts will be forced to a decision. Do you price your basis contract or do you roll it? And in a lot of these instances, you'll see the spreads weaken and you'll see the futures markets weaken. I think that's a possibility, at least as we get closer to first notice day.
2 senior executives at Cargill are retiring as the company continues to restructure its operations. After more than 30 years at Cargill, the company's head of business operations and supply chain, as well as its treasurer, will retire at the end of the year. The announcement follows the company's reorganization efforts, which were implemented when less than 1/3 of its business units met their earnings projections during fiscal year 2024. Cargill's profits have slumped due to bumper global crops. Profits have also taken a hit as the U.S. cow herd numbers have fallen to their lowest level in 7 decades. Cargill's profits during the most recent fiscal year fell to $2.48 billion, the lowest level in nearly 10 years.
Interestingly, perhaps, we ended the last story with the line, perhaps some commercial entities are caught off sides at the Gulf. And then you see this headline, Cargill supply chain head and treasurer to retire amid shakeup. Could the two be related? I don't know. I do think that there are going to be problems in the commercial grain sector. There's going to be problems with anything tied to farming, commercial grain, fertilizer, seed, equipment, you name it. There's going to be problems because we're in a pretty bad way right now when it comes to the farm economy. I've made the argument that we're in a full-blown recession. I think there was a poll on AgWeb printed it that like 70%, I think it was 70% of economists, don't quote me on this, said that the farm economy is in a recession, but a whole bunch of them said that they're not and said we're not in a recession. And I would like to argue with them about it. But in any case, interesting stuff.
Goldman Sachs is projecting the euro could plummet if Donald Trump is elected president. The bank is calling for the euro to decline by 10% versus the dollar if Trump wins and implements tariff hikes along with hefty domestic tax breaks. The bank is also calling for the yuan to fall by 12% under the same scenario. Analysts believe higher tariffs could shift trade and create conflicting policy choices that would benefit the U.S. dollar. Robust U.S. earnings, coupled with speculation that the Federal Reserve may adopt a less aggressive approach to future rate cuts, have caused investors to increase their investments in the dollar ahead of the election.
I'm sorry, guys. Some of you guys are going to get upset about what I'm going to say here, but the media is implicitly biased against Trump, and that's a fact. You know it is. You know it is. Even if you're on the left, you know it is. And that doesn't mean that they're wrong. It just means that that's the way that it is. Look at this headline. It's ridiculous. Goldman sees risk of 10% drop in euro if Trump wins U.S. election. So they've got to associate Trump with a drop in something, right? When the article actually goes on to just talk about how Trump's going to be positive for the U.S. dollar. That's what the article actually says. The headline is misleading because God forbid they print an article that says Trump's going to be good for something in the United States, right? Okay, so here's some quotes from the article. The bank already believes that an outperforming U.S. economy and relatively high interest rates will keep the dollar strong, and it sees risk that strength in the greenback could last even longer than its forecast if next month's vote results in much higher tariffs. A quote here from one analyst at Goldman: the approaching U.S. election could change this big picture in a number of ways, but we continue to think risks around different policy outcomes are also skewed toward more dollar strength. So the headline very clearly should have read, Trump may result in additional dollar strength, and that's not what it read. We don't care about the euro here in the United States for the most part. It does account for 58% of the dollar index weighting, but our readers here and listeners in the United States, we care a lot more about the dollar. And a strong dollar would be negative for a lot of commodities, and the implication for us would be strong dollar plus tariffs, maybe negative commodities, and that would be maybe the result of a Trump election or presidency. But you know something? The trade, everybody out there is well aware that that's a strong possibility here in 2 weeks. So I think a lot of that's been discounted, at least to some extent.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
First, don't get all worked up about my media comment, guys. You can drop the hate mail in YouTube, but you know it's true. Pete is too cool for school. We did 51 minutes of uncut question and answer with Pete Meyer yesterday. Pete is a professional analyst. He's worked with fund traders and biofuel outfits, and he knows his stuff, and he's probably the smartest dude I know when it comes to markets. He's super transparent, super honest, super matter of fact. I had some really fantastic stuff yesterday. You're not going to get 51 minutes of uncut market info anywhere outside of this. And yeah, we charge you for it because we don't run ads. We don't have any sponsors. We're not beholden to anybody except for our viewers and listeners. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. It's a $50 per month subscription. You can cancel at any time. No other fee, no other obligation. Nobody tried to sell you anything else. You'll get all my cash grain marketing recommendations, our morning email at 5 a.m. Central Time every single business day, new premium video every single business day. As I mentioned in the past, I know you guys are busy. It's a piece of cake to sign up on your phone. It takes about 30 seconds with a credit card. We do Apple Pay, Google Pay. Everything is easily accessible on your phone. It's one click to play the videos. There's no login instructions or anything like that. It's super simple. Check that deal out this morning, guys.
Next year's Russian wheat crop is expected to be comparable to this year's production. According to Russian agricultural consultancy ICAR, Russia's 2025 wheat harvest will reach between 80 million metric tons and 85 million metric tons. Sovicon is estimating the crop at 80.1 million metric tons. The crop projections are similar to this season's official wheat harvest estimate of 83 million metric tons. With that being said, unfavorable weather has impacted next year's crop. Sovicon is projecting a reduction in next year's wheat acres and a decline in wheat yields.
The Russian crop's going to be off, and that's not anything that's surprising. But these estimates from the private groups are coming in pretty darn close to where USDA is at. So I don't think there's any reason for alarm right now. Russia is projected to be the world's top wheat exporter this year. They're supposed to account for 22% of all global wheat exports if this situation is all realized. So I think it's kind of a non-starter for the wheat right now. I think wheat rallied on some Russian dryness several weeks ago, and now we've kind of just kind of consolidated since.
U.S. corn and soybean harvest should conclude quickly. While some parts of Missouri, Iowa, and Illinois will see limited rainfall this week, the near-term forecast remains dry for the vast majority of the U.S. Corn Belt. Some better accumulation is expected during the first week of November for both the Corn Belt and the U.S. Plains. The Mississippi River is nearly 9 feet below normal at Memphis this morning and is projected to drop even further during the next 10 days.
It's dry. It's super dry out there. I know a lot of you guys are dealing with really dry grain, which is not necessarily helpful for a number of reasons. The forecast indicates some rain here for the Central Corn Belt over the next week. It's supposed to open up a little bit during the first week in November. I understand this forecast is more than a week out and may be unreliable, but the idea here is that you will see a return to some better and more widespread rain. The river is very low, 9 feet below normal at Memphis. It's going to get worse before it gets better, which again is a big part of the basis situation when it comes to corn and soybeans at the Gulf, and it impacts basis in the interior also.
USDA reported a flash sale of corn on Tuesday. U.S. exporters sold 14 million bushels of corn to Mexico for delivery during the current marketing year. Mexico will likely be the top buyer of U.S. corn again this season.
Since beginning last Monday, a combination of Mexico and unknown destinations bought 3.2 million metric tons worth of corn via flash sale. So there's some much better corn demand here on the export front. And if this were to continue in any way, shape, or form, USDA may be a little bit too low with its export projection. I think they're too low with ethanol also. I think that carryout projection for the United States corn, which is 1.999 billion bushels. If I had a guess today, I'd say south of 1.85 is where we'll end up. But lots of things can change, lots of variables. What did cattle do yesterday?
Cattle futures were higher. Live cattle were 70 cents to $1.30 higher. Feeders were 50 cents to $2.32 higher. Box beef continued to climb on Tuesday. Choice ended the day at $323.96. That was up $1.10. Select ended the day at $294.80. That was down $141.
A little bit of action in the outside markets. U.S. dollars higher. The S&P's off 14. Dow Jones is down 200. Gold's up $5. Crude oil's down $1.35, and the January WTI 69.96. Have a great day, guys. We'll be back on Thursday